Hi, everyone. We're looking at this question, which is November 2019 question. It's question number 4B from group financial statements. This question was tested for 8 marks in the examination. So you can imagine that we should be spending not more than 14-15 minutes, including the reading and of course completing the answer there, right? So let's have a look at the requirement of the question. It says that MNC Limited is in process of setting up a medicine manufacturing business, which is at a very initial stage. For this purpose, MNC Limited, as part of its business expansion strategy, acquired on 1st of April 2019, 100% shares of Akash Limited, a company that manufactures pharmacy products. So it's a clear business combination scenario because you have something which is a business in place. So there are processes, of course, inputs and processes in place, and very likely even the outputs. So the definition of business is met, and Ind AS 103 becomes applicable for us. Okay. And now we have provided further that the purchase consideration was by way of share exchange valued at 38 crores. The fair value of Akash Limited's assets and liabilities were 68 and 50 crores respectively, but these do not include, right? So there is something which is available. There are some patents, as you would observe, again, some developed patents here, and there is something which is a license, for example, right? So they're not included in those 68 and 50 crores respectively, right? So we need to include those provided that there's a fair value to that, right? That's how we start looking at, okay? And the requirement is suggests the accounting treatment of the above transaction with reasoning, okay, with reasoning under applicable Ind AS in the books of MNC Limited. Now, importantly, when you say MNC Limited, please be careful understanding we're talking about the group now, okay? Because from MNC Limited's perspective, the investment is what you pay, what you are issuing shares, for example. But we need to understand that even though the question does not address it clearly, we should be looking at the group accounting. Okay. Now, essentially, if I look at the scenario that there are some assets which Akash Limited has, but they are certainly not considered in this 68 crores because we are essentially looking at only assets from the recognition perspective. Now, you would recollect, right? Under a business combination, when you are acquiring another business, right, there can be, right? So we want to kind of mention that under business acquisitions, there is a possibility of some assets and liabilities, right, which are not recognized in the books of the acquired business. However, for the combined business, these assets or liabilities may meet the recognition criteria, and these need to be generally measured at fair value. That's something which is the underlying principle. When you're acquiring a business, you don't only recognize those assets and liabilities which are there in the balance sheet of the acquired business, but there could be also some elements which are not recognized by the entity. The common example, as we've discussed, is there could be research being conducted by the acquired business, but from the group's perspective, from the combined businesses perspective, it could be a developed or or let's say, something which is of a value to the group as a whole. So accordingly, that value would be relevant. Okay, so let's have a look at it for each of these items. The first item is suggested at a patent owned by Akash Limited for an established successful new drug that has a remaining life of 6 years. A consultant has estimated the value of the patent to be 8 crores. However, the outcome of clinical trials of the same are awaited. If the trials are successful, the value of the drug would fetch 12 crore rupees, or expected to fetch at least 12 crore rupees. So when you look at, of course, this instance, we look at owned patent. Now, please bear it in mind, it is owned, of course, so there could have been some value, but that is not considered in the calculation of the 68 crores. So that is something which is mentioned, that the below are not included in the calculations of assets and liabilities of Akash Limited, right? So when you look at this owned patent, we need to understand that the owned patent, right, should be recognized at its fair value of rupees 8 crores, okay, which is provided to us, right? While there are outcome of, or there is, let's say, the outcome of clinical trials awaited, okay. The value of 12 crore rupees, right, would be considered as contingent, and therefore the additional amount of 4 crores, which is 12 minus 8, will be disclosed separately, right? It becomes a contingent asset. That's the way you start looking at the treatment of that differential amount of 4 crore rupees, okay? We are now looking at the second scenario where it says that Akash Limited has developed and patented another new drug which has been approved for clinical use. The cost of developing the drug is 13 crore rupees. Based on the assessment of the sales success, a reputed valuer has estimated the market value at 19 crore rupees. However, there is no active market for the patent. Okay. In this scenario, when we look at this developed patent, okay, when you look at this developed patent, you need to, again, since the approval for clinical use is available, the patent meets the identifiability criteria, all right, and it should be recognized at its fair value of rupees 19 crores, right? It does not make any difference whether the patent has an active market or not. Okay, so that's again the explanation that you need to give to the examiner in terms of how do you look at the measurement of this developed patent there. All right. Let's have a look at the third scenario. It says that there is a license in place. It says that Akash Limited's manufacturing facilities have received a favorable inspection by a government department. As a result of this, the company has been granted an exclusive 5-year license on 1st of April 18 to manufacture and distribute a new vaccine. Although the license has no direct cost to the company, which actually means it's a grant, okay? Its directors believe that operating the license is a valuable asset which assures guaranteed sales, and the cost to acquire the license is estimated at 7 crore rupees for the remaining period of life. It is expected to generate at least equivalent revenue. Now, again, we want to say that while the license has no cost to Akash Limited, right? While there is no cost as far as the license is concerned to Akash Limited is concerned, we are saying that the fair value of the license of rupees 7 crores, right? That's something which is the value, should be considered in evaluation of the net assets of Akash Limited, right? A very clear, straightforward principle that we want to highlight in this scenario. Okay, now given all these numbers, so we have got 8 crore rupees for the first patent, 19 crore rupees for the second patent, and 7 crore rupees for the license. We want to say now calculation of goodwill or capital reserve on acquisition of Akash Limited. Okay, we are provided with the information which is purchase consideration. So we can say rupees crores, right? We are given that 38 crores is something that you're paying in terms of shares to the shareholders of Akash Limited, less net assets. There is no scope of non-controlling interest because the acquisition is done for the 100% shares of Akash Limited, right? So net assets, we are given the fair value of identified assets, which is 68, less liabilities, which is 50. That makes it 18. Okay. And then we are looking at fair value of other assets, right? The patent of 8 crores, the patent of 19 crores, and the patent of 7 crores. And this total makes it 34, which actually means we are talking about that the worth of the business is 52 and you are paying 38 for that. Now, essentially, this results in capital reserve, right? This results into a capital reserve of 14 crores from the acquisition of Akash Limited in the books of MNC Limited. All right. So that's how you start, understanding the requirement of the question. That's how you start looking at, explaining the concepts and of course, arrive at the calculations in the given case of the capital reserve, of course, as applicable in this scenario. All right. Thank you very much.